think what people really are still struggling with is this transition, right? TradFi, CFI, DeFi, right? Those that resist the new die. I believe there is a concerted collaboration, right? That these central bankers get together. The thing I'm super excited about Coinbase is this decision, as you said, to go with Base and to not try to create their own L1 like all these other exchanges that have met an ugly demise. To basically make an endorsement. It's not exactly an endorsement, but in essence, it's an endorsement of Ethereum. I think what people really just are still struggling with is this transition, right? TradFi, CFI, DeFi. And this is a move toward DeFi, clearly, and that's a good thing. But people just are still stuck on this, no, exchanges are bad and not your keys, not your coins. Like, please stop. Just please stop that. This probably a fad thing. What it means is something that's happening is real and has legs. The idea that Coinbase, which a lot of people say, oh, crypto, it's a fad, as said, right? First they laugh at you, and first they ignore you, then they laugh at you, a bunch of nerds and geeks playing through magic internet money. 108 million people. That just let that hang in the air. That's a lot of people. That's a lot of people in a relatively short amount of time. Coinbase is a third as old as Netflix, maybe roughly, maybe 30% as old. It's really gratifying to one, see that adoption, and two, the Netflix is a darling, right? It's one of the fangs, and it's what all of us kind of use as the standard now for entertainment in terms of streaming. But even with all of that and being a global business, it's only twice as large in terms of daily active users. So I just think that's congratulations to, again, Brian and the team, and good for all of us, right? Those that resist the new die. And there's example after example after example of this. Is change is inevitable, technological evolution is inevitable, and to resist, Andy Grove wrote a whole book about this, that the ability to recognize change with imperfect information is an absolute superpower. Companies don't die because they act incorrectly. They die because they don't act. They're paralyzed by what could happen, that they just don't act, and they die. And so to have the courage to act, knowing that, this could cannibalize some of my core business, but I have conviction, or we, because it's a we, collective we, have conviction that this is going to be the proper evolution of the business. That's what leadership is. That's my hashtag edge. That's edge. That's how you gain edge, is you have courage. So I'm like 2 thumbs way up, to quote Roger Ebert, and big round of applause. And as a shareholder, I'm pretty psyched too. And I would say that unfortunately, the overall markets have drifted that way in the social media age. If you ask a chatbot a question and it gives you an answer and you accept it with no skepticism, no doubt, no, hey, is this exactly it? That's dangerous. Super dangerous. And anyway, it's one of my personal pet peeves right now. How's the market, the equity markets over the last month? Everybody's, they're up a lot. They're not. They were up a lot the first couple weeks. And now they're kind of downish to flattish. The Dow is actually flat for the year.
Yeah.
Nasdaq's still up a decent amount, but it's basically flat for the last month. And I think there's a pretty big yin and yang going on between realities of economic data and narratives of no landing. I said, I think Q3 and Q4 GDP was essentially, not completely, but essentially an SPR trick. You release the oil from the SPR, you count it again. Okay, great. And then you had a little bit of the fake, I call it the fake retail sales, which is prices are higher, so you're spending more. Is that really GDP? I mean, I guess technically it is, but I don't like that. So look, I think consensus for Q1 is 0. GDP now has some big number like 2.5. Atlanta Fed is I would say more accurate than the consensus, but they're not infallible. I would take the under on that 2.5, but we'll see. And ultimately, this idea of no landing to me is kind of silly, right? Because no landing implies that we're still at 30,000 feet cruising along in the air. That's clearly not the case. This is not a perfect economy. We had a year-over-year change in GDP last year of 0.9. That is stall speed, right? That is below the natural rate of growth, which is around 2%. So that is definitionally a recession. Now, they're not going to call it a recession because of the fake jobs numbers. And it was like what you see in the movies, right? Bumper to bumper traffic, people with shopping bags, going in and out of the mall, chowing down on, the amazing food in Shantundi, which is like this awesome kind of outdoor marketplace and retail, high-end retail. Awesome. If you ever go to Shanghai, go to Shantundi and hang out. It's just awesome. And I love the story of Shantundi. So it was a slum. And the slum was notorious because the ratio of toilets to people was 1 to 40. There was one toilet for every 40 people in Shantundi.
Doesn't seem like a recipe for success.
Not a recipe for success, right? And this developer said, I want this land. I mean, it's right on the Bund and and the government said, okay, here's the deal. You build a new city on this other land that we'll give you for free. And you have to have one toilet per 4 people. So one per household. But the point there was China is reopening. But again, the focus was on consumption and evolution of the middle class. And so, we're all debating this whole nonsense of trade wars and that. And it's like, they don't care. They just want their people to get jobs, to spend money, and to live the life, that we pursued from 1970 to 2020. That is the question to ask. And it has to do with financing of the financial system. So, Japan in particular is one of the primary carry trade financing centers and has been for years because they had 0 interest rates. So you could borrow at 0, you could take that cash and go buy other assets, whether it was US hedge funds doing it or European hedge funds doing it or whatever. And basically the Bank of Japan facilitated that whole thing by just being the buyer of last resort for the bonds. Because who would buy a bond that paid 0 interest? Who would buy a 30-year bond paying 0 interest? Well, no one. So the Bank of Japan waves it in, prints money, puts that money into the system. Then foreigners come and borrow money from those Japanese banks, pay them basically no interest, but they don't need interest because they're being kept afloat by the Bank of Japan. This is not sustainable. And there's these books written that once you get to 100% debt to GDP, it has to fail. Well, they're at 226. It hadn't failed. So that's part of it. So the Japanese carry trade and just the money actually ends up in meme holder accounts because Goldman borrows a bunch of money from a big Japanese bank and starts buying stuff. Well, then they offer, well, it's not Goldman, it's UBS and Merrill Lynch and Robinhood. And then they give all their users credit. So that's why margin debt in the United States went like this. So the two things I watch are margin debt. So if margin debt's expanding, then the meme stocks are going to rip. If margin debt's contracting, meme stocks are going to get crushed. And that's exactly what happened. Last year, margin debt collapsed because people had to make margin calls because stocks were going down and exacerbates. But starting in October, China floods the world with money, and that money finds its way into the big houses, Ken Griffin's house first, always. And no, I'm serious. I mean, they had their record year last year, right? I believe there is a concerted collaboration, right? That these central bankers get together and it's a process of saying, okay, Europe, ECB, you're going to have the strong currency. So the rest of us can devalue our currencies and be mercantilist and sell a lot of stuff globally. The one thing we need is the separation of that green bar into 4 quartiles. Top quartile households, second, third, and bottom quartile households. And I will bet you that if you broke that green bar into 4 quartiles, the dark green at the top, which is high income households, would be super big. The second would be smaller, the third would be smaller. And at the bottom, the low income households, infinitesimally small, gone. Those are the people who are increasing their credit card usage. Those are the people you're not seeing at the mall. Those are the people you're not seeing on airplanes. The rich are still good. And they got handouts too, which makes no sense to me. How is it possible that we made handouts to everybody instead of based on need? Just makes no sense.
I know. I'm aware.